Live from the Business RadioX studio inside Renaissance Bank, the bank that specializes in understanding you. It's time for North Fulton Business Radio.
Hello again, everyone. Welcome to another edition of North Fulton Business Radio. I'm John Ray, and folks, we are broadcasting from inside Renaissance Bank in beautiful downtown Alpharetta. We've got two great guests for you today, Paris and James Williams with Next Level Financial. They're going to talk about some of the particular issues that are involved in running your commercial real estate firm. But before we get to Paris and James, I just want to remind you that Renaissance Bank is the antidote if you and your business are tired of the automated and impersonal mega bank experience. And if you're at one of those banks, you know what I'm talking about. The folks I refer to Renaissance come back and tell me that Renaissance is big enough to handle pretty much any need that they have in a business, but they're small enough to deliver their services in a personal way. And that's a magic combination. And the place to start is to go to renaissancebank.com to learn more and be in touch. Renaissance Bank, understanding you, member FDIC. And now I want to welcome Paris and James Williams. Paris and James are with Next Level Financial. Paris, James, welcome.
Thank you. Thank you for having us here.
Yeah, thanks for coming back, return guest.
Yes.
Glad to be back.
Yeah, we're always glad to have return guests, particularly the two of you. You're doing such great work. So let's tell folks about that work.
Sure.
We run a fractional CFO firm, particularly focused on commercial real estate firms. So I always tell people when I'm out and about, if they've never heard the term fractional CFO, it's a fancy term for supporting folks in business on the finance side who are not ready yet to hire a full-time CFO. They hire our team.
I think people are getting more and more cool with that kind of concept and understand the word fractional, right?
Agreed. But I would still say it's probably about 50% of people who still don't really, they might have heard the term fractional, but they're not really sure. And I think it's because so many of us are doing it differently. And so I spend a little bit of time just sort of sharing stories about the way we approach the fractional work.
Right. So let's give a little background on the two of you. Why this firm? What lights you up about the work? In terms of the work that you do.
Mm-hmm. Yeah. This work is fun for me. I've as a young guy growing up, I've always been interested in business and had a lot of curiosity around how things work I watched a lot of TV as a kid.
Oh,
so I would watch some of these shows where you had these business people, and I would create all of these scenarios, these things in my mind about business, how it worked, and all the drama that went along with it.
Oh,
and so that that was piqued my curiosity as a young person. My grandfather also owned a business. Actually multiple businesses, and I grew up around some of that.
Mm-hmm.
And so it business was kind of a part of my life, as a young child. Unfortunately, some of the things that, my grandfather, had done in their businesses weren't always best practices financial wise.
Mm-hmm.
And so,
in other words, he was the typical small business owner.
Exactly. Exactly.
Let's be clear about this, right?
Exactly.
Yeah.
So I learned, I wasn't consciously picking some of those things up, like, oh, this is what you do. I wasn't thinking of any of that, but just, really upon really reflecting on those experiences, which that he had and what they experienced, left the mark or impact on me. And so I went to school for business. Accounting was my focus, and worked for accounting firms and worked in investment firms and other financial firms, and it's just been the area of work that I've done or that I've been in my whole career. So, and I still like it. So,
Yeah.
so it's good stuff. So I've seen a lot, learned a lot, and just enjoy understanding, and still curious about what makes different businesses tick, and what makes them better, some better than others. So that curiosity just sort of drives me.
Mm. So the focus, you've got a particular focus on commercial real estate firms. I mean, you could have any kind of focus.
Mm-hmm.
You could have no focus for that matter.
Yeah.
When it comes to the clients you work with. Why commercial real estate firms?
Yeah. So a lot of that draws back to my experience. Well, first, my interest in real estate, in commercial real estate, and that's how I sort of segued into that specific niche as an employee. I've always worked, as I said, in the finance and accounting, investment side, but I ended up parlaying all that experience and going to work into real estate. So I worked in the development aspect of real estate, in-house. I worked in the investing aspect of real estate, and so I just always enjoyed being a part of something where I can be a part of something actually being developed, and some sort of asset being physically there, and it being either useful or nice, and so that's where that interest really came into play. I just like the built environment, and so I went to go work for a few firms that focus in on that kind of work.
So when you walk into a commercial real estate firm, you speak their language.
Yeah. I understand the language. I worked in development on the single family side of development. I worked in the commercial, industrial, retail, office, just community development. So I worked in a lot of different spaces prior to focusing on our own firm here, and focusing on that niche.
So let's talk a little bit about this segment. What are some of the big issues that they deal with? Maybe the problems that crop up in running a commercial real estate firm.
Mm-hmm. Yeah. It's it comes back to cash. Cash is king, as they say, and it is particularly acute in real estate because, for the most part, the way capital flows into real estate. So if you're a architect, engineer, if you're a service provider on a real estate project, and a developer is paying you, you're getting, the way you get paid for the most part is through what we call this draw process. And that does not that is not always consistent. So you're not always getting paid consistently, even as you're doing work consistently, or sometimes work stops in real estate. And so you don't get paid because you're not working. And so I see this a lot. I see this in our firms that we work with, where the financing source, wherever the money is coming from, doesn't come consistently. It comes in chunks. It comes in lumps.
Mm-hmm.
And so as a firm owner, the firm owner is, because this is the business model, the firm owner is faced with having to make sure that they can manage having, their fixed costs. We were talking about a little bit of fixed costs earlier.
Right.
Their fixed costs, their employees, and managing all of that, all the while not having certainty on those cash flows that are always coming in. So it's just part of the business. It's part of the nature of the business. And so, a lot of real estate firms go out of business because they're not able to, or firms that are in the real estate space go out of business because they're not able to handle that balance between when that money's going to come in versus keeping people on staff, right? Sometimes that gap is really big. So we work with firms in order to help them to forecast out and manage that. So we understand, or we look to understand, what is the sort of consistency of, or predictability of payments coming in. We model some of that stuff out.
Mm-hmm.
Do the scenarios. Okay, if this happens,
Sure.
or if this takes longer, what happens, and we got to carry all of this cost.
Mm-hmm.
So it's a big deal, and it's a big deal for all businesses, but in real estate it's really particular because of the way that projects work in real estate. And if you've ever watched a project, a development go up, you'll see that there's starts and stops, right?
Right.
You're like, why haven't they finished this yet?
Sure.
Started, right?
Yeah.
Well, there are people that are working on those projects. When those projects stop, there's no money flowing. There's no
Mm-hmm.
money coming in.
Right.
Right. And it's unpredictable. You don't know when it's going to happen.
Mm-hmm.
So that's why I say it's really acute in real estate, is because just the nature of that business, where things don't, you don't start you typically don't start a development and then, 6 weeks later, you're done and everything was consistently flowing. There's starts or stops. There's issues. We hit some issues. Our costs are higher. We had to see if the bank is going to loan us more money.
Mm-hmm.
There's all different types of things that are happening.
Sure. So you've got a business with unpredictable cash flows, and that can wreak havoc on a very busy owner,
Mm-hmm.
CEO of a business like that, right?
Yep.
Yeah. Particularly when that's really not their expertise, right? So, saving, for example, making sure you're reserved properly for that bust period.
Mm-hmm.
Something tells me you've got a story or two about that.
Yeah. So interesting. We had a firm that had a great 2023, actually the last 2022 to 24, a very nice run. And businesses is growing. There's more clients coming in the door. Projects are abundant. Hiring, aggressively
Mm-hmm.
to handle all of the work that's coming in. And then sort of towards the end of 2024 and into 2025, things just started to really slow down.
Mm-hmm.
And some of those slowdowns were related to just project stoppages. There are things going on in the governmental realm that got in the way of projects moving forward. Some projects weren't being funded. So when I started working with this firm, I put together this cash flow analysis to give them a sense of what to expect going forward. And the business owner said in the meeting, "Oh, I've never seen anything like this."
After the heart attack they had, they said they've never seen anything like this, right?
Yeah.
Okay.
So, yeah. So they had never seen for them in their firm, anyone sort of lay out, this is what this is what cash is going to look like going forward.
Right.
And it seems simple, but as you said, you have busy business owners, busy executives. They're running from here to there. They're trying to get business. They're trying to keep the lights on.
Mm-hmm.
They may not have, they don't do this kind of thing. And so, it just becomes non-existent. They do what I call like bank account forecasting. So let's look in the bank, see how much we got.
Yeah.
Okay, I think
we feel good. It feels good, right?
Yeah.
And then all of a sudden when it's a little thin, or they're scrambling to make payroll, then they feel like they're impoverished, right?
Yeah. It's a challenge.
Yeah.
It's a challenge.
Well, and I would imagine for a business owner like this, they are dealing with, not that they're different from a lot of business owners, but they've got some extraordinary, commercial real estate firms has some extraordinary situations when they're dealing with contractors and the kind of turnover that you get in employees that are in construction or what have you. I mean, they've got some special circumstances that really affect them in terms of how they manage their business. So that just is another thing, to your point, that eats up their day, eats up their time, and getting that cash flow forecast is really not at the top of their agenda.
Yeah. There's too much going on. There's too much on their plate, and as and just the type of business that we're talking about here is critical. When you have a business like this that is really focused on projects, and those projects are starting and stopping all the time, and so you don't really have a whole lot of certainty in terms of when those cash flows are going to be coming in.
I would imagine, and this is a question. Sounds like I know, but I don't. It's a question. I would imagine that a lot of these firms, they have maybe outside investors in particular projects, right? So they've got to do reporting to those investors.
Yep.
And that's where they need some help too, right?
Yeah, that's absolutely true. So we work with developers also, and that is particularly important when they're having an investor or even banking partners. And so that is key because the investors, the banks, but particularly the investors, they demand a higher level of forecasting ability. Like we really want, we want to, our money's on the line. We want to know where this thing is going, right? And we want to go, consistently. And having really good, sound financial statements, because that when you, with having a banking partner or a investor, the transparency is key and important. And that's not always on the mind of, someone who is working on putting together deals. If you're a business owner and the business is growing and a lot of times folks that are in real estate, in development, they're deal makers.
Sure.
They find deals, they put together deals. They're not necessarily working behind the scenes on the spreadsheet. Right. That's not where they like to spend their time.
Sure. Their spreadsheet's the back of a napkin. Right?
Yeah, exactly. It's round numbers. It's the back of a napkin. And they're not working in their accounting system, and don't want to do any of that type of work. So what we are really helpful at is really working to make sure that their financials are in a space where it could be presented to investors, where it could be presented to banks. And then we tell the story. And that's one of the things that we're really good at is telling the story about what we're seeing, how it relates to whatever the project is or whatever the deal that needs to be made. And that really drives value for them.
Yeah, I want you to say more about that, because I'm sure I would imagine, I should say, there's some listeners out there that are thinking, tell the story. What does that mean?
Yeah. Well, I'll give you an example. Actually, yesterday, one of our businesses, we're looking to raise some capital, but also in addition to raising some capital, we're also looking for a new banking partner. And we had a meeting with the bank. It was our second meeting with this particular bank, and we're the sort of first part of the conversation is about how much we can get on a line of credit for this for the business. And based on this particular bank's criteria, they came back with a lower number than what I expected and what I think that we should be able to get. And part of the reason is because this bank and all banks have their own sort of criteria, and does it check this box? Does it look like this? And And one of the issues was related to collateral. And it's, if you loan someone some money, you want to know that you can come back for something if something goes wrong, right? That's the collateral piece. The collateral that they were basing this on was our accounts receivable, and our accounts receivable numbers were a little bit lower relative to what their requirements were for this certain size of line of credit that we wanted. And so I said that, well, you're looking at, I actually had this chart already up because I was already going to talk to the business owner a little bit later about their financials. And I had a chart that showed a trend of their accounts receivable month over month for the past 12 months.
Mm-hmm.
And so I looked at that and I basically just told a story from what that chart, it was a bar chart, and there were some, ups and downs. There was, peaks, there were, valleys and all that. So I told a story about the reason why our level of accounts receivable is what it was. It's based on seasonality. It's based on the fact that we collect cash really fast. So we're not going to have a high balance. Like you don't want a firm that's carrying a lot of accounts receivable.
Right. That's a good thing to collect cash fast.
Yes, you collect that. Exactly.
Yeah,
exactly.
right.
Exactly. And then I had another chart that calculates this metric. It's called the day sales outstanding. So it's how fast money turns through from customers. And we had really low days relative to any average out there. So I'm saying we're collecting cash very fast. Look at this chart. Look at the last, year of this chart, and it shows that we collect cash really close. So we're not going to have a really high accounts receivable balance, and we don't necessarily want that, right?
Right.
And so it's just telling the story about, well, I understand your criteria, but your criteria is not really conducive to our business model. We are cash flowing. There may be some other ways, a different way that you can look at this in order to get comfortable with loaning us the dollar amount that we need. So that's what I mean by telling a story. It's looking at the data, it's the financial data, and it's really just telling the story about this is what's happening here, and just setting the context and kind of, drawing the individual or the listener into the way that we, telling into the story we wanted to tell them. And this is really important stuff you're talking about here, because you're talking about, let's say a conversation like this with a commercial loan officer who's going to take your request or your exception, whatever's going on, right, up to a committee somewhere. They've got to be able to tell the story. Yep,
You've got to give them the ability to tell that story in something in a way that's logical. And if you're sitting there caught flat-footed with no financial reports, no backing, nothing like what you provide, you're in trouble.
Yeah.
Right.
Yeah. Because they just want something. I mean, a lot of times they want to do something for you.
Sure.
And just to your point, we were on a call with one of the gentlemen, but his supervisor wasn't able to make it. And so when we were finishing up the call, we said that we would sort of circle back. But he's like, hey, can you send me those charts so that I can then share this information with this person, with his supervisor? And then we can kind of, we can look at it and then we can get back to you on it.
I love it.
So what you just described is exactly what happened in that case.
Yeah. I sit in a bank every day. See, I catch wind of some of this stuff, right?
You got it.
Absolutely. Paris and James Williams are with us, folks. Next Level Financial is their firm. You've got a financial health assessment, something you call a financial health assessment. Just describe that.
Yep. So it's what we call 5 levels of financial health. It's a scale. The way we typically use it is when we're first talking with a potential client or a new client, and it's an assessment, and it shows how healthy their business is, or how healthy their financial business is. And it starts from the first level is financial crisis, and it goes up to financial stability, and then growth, and then optimization, and financial excellence. And so what we found is there are key markers or key things that are practices that are important to implement into the financial operation of a business. And that's what we're testing for. We're testing to see what actually is happening in the business, how healthy the business is liquidity wise, but also are there monthly financials being prepared? Are people looking at them? Are we doing anything with them? Are we forecasting? So we're asking these different questions to get a sense of where we are. And the goal is to move that business from wherever they are to the financial excellence. That's the highest level that we've got. A lot of times for us, the businesses that we start with are in that sort of second to third level, which is they're above financial crisis, which financial crisis is basically, not enough money, to do much of anything.
Sure.
But they're at a stability point, but they need, but they're not able to really optimize, not really to really make good financial decisions because they don't have the tools to do it. They don't have the experience or knowledge to do it, or they don't have, they don't have the people that to do that to help them.
Yeah. Yeah. Wow. So what are the symptoms that are going on in my business that make me think I need to pick up the phone and get in touch with the folks at Next Level Financial?
Yeah. Well, if you're feeling, it's a couple of things. If you're feeling, or you don't have a real clear sense of what your profit margins are, and I'll say gross profit. So basically, the cost to deliver your work. So you have overhead, and that all falls down to the net profit line. But the gross profit deals with what it costs to deliver the work that you do. A lot of our businesses don't have a clear sense of that, and so they're throwing a lot of cost at work to and as long as money is flowing through, they it's fine for a while.
Yeah.
But what typically ends up happening is after a while, cash flow really starts to sort of tighten up because they're not really understanding where those cost areas are and how they can leverage and how they can really focus on enhancing, those margins. So having issues with not understanding what their margins are, and this all sort of in terms of like how this relates or the questions that they end up having is do I have the ability to fund the next round of hiring people, right? Do I have the ability to make this investment? We have a client that is looking they're a contractor. They're looking to own some assets now, as opposed to just doing the installation, just doing the work. They want to own some of their assets. And there's an opportunity came up for them to own some assets. And the business owner is like, yeah, let's just, I think we can just fund it. And it's like, yeah, we got money in the bank. But let's really forecast this out. Let's look this out. Let's look at an analysis to see what the impact will be. And so once I did the analysis on it, the forecast on it, I was like, well, if we do this, in 3 months, it's going to be really hard for us cash flow wise. So while things look okay now because of what this investment will do for us, and it'll be, it's a great opportunity, but we need the cash flow is not going to be there. So I suggest let's look at partnering with another investor. Let's look at partnering with another funding or capital partner.
Mm-hmm.
And so what that then led to is us then having a series of meetings with other potential capital providers that not only can help with this particular situation, but also we can form a longer term relationship to do some bigger type of deals that we want to do in the future. So understanding, not having a clear view of what, big investments, whether it's people investments or physical asset investments, what that's going to do to your financial situation. And I have more than a couple of business owners that, some would just go out, but I have more than a couple that kind of feel that anxiety with like, okay, can we do this? This is a big thing.
Yeah.
And I think that more than anything sort of drives them to say, okay, we need someone else to kind of help us to figure some of these things out, which are going to move the business forward. But it's just not a lot of certainty, and that just drives that anxiety and that fear.
Yeah. Yeah. Wow. What great work. Next Level Financial folks, Paris, James Williams are your folks there. Wow. This has been wonderful. Yeah. What a great work you're doing. And I can't imagine there aren't some folks that wouldn't want to be in touch. So let's tell them how they can do that. Paris?
Absolutely. Our website is nextlevelfinancial.co. You can also find me on LinkedIn, Paris Williams, and we would love to connect with y'all.
Wonderful. Paris and James Williams, Next Level Financial. Thanks again so much for coming in and sharing your great work.
Thank you. We appreciate you.
Thanks.
Absolutely. Hey, folks, if you're a law firm, medical practice, manufacturer, there is one headline you never want to see. Local business pays thousands in ransom after cyber attack. Beyond Computer Solutions exists to make sure that headline never has your name on it. They provide managed IT and cybersecurity services built for industries like yours where compliance and reputation are both essential. The best place to start is a complimentary security assessment to find out where you stand. And the place to go is beyondcs.com. They do superb work, and I know that because they keep us cyber safe here at North Fulton Business Radio. And if you're a consultant, coach, or fractional executive and you're tired of the mindsets that hold you back in your business development and your pricing, I've written a book for you. It's called The Generosity Mindset, and it will change the way you think about the value you bring, the relationships you build, and what you charge for your work. You can find the book on Amazon or at your favorite bricks and mortar bookstore or at thegenerositymindset.com. And if you're in the North Fulton region, you'll find signed copies of the book on the shelf over at Barnes & Noble on North Point Parkway. Finally, I want to thank you not only for listening to the show, but all your support over 10 years of North Fulton Business Radio. We couldn't do it without your kind support. You enable us to live into our mission to be the voice of business in the North Fulton region and beyond, and I am grateful for you. If you'd like to be in touch with me, offer feedback, feel welcome to email me directly. Go to check out John at johnray.co. That's the place to reach out and touch me. So for my guest, James Williams, Paris Williams, I'm John Ray. Join us next time on North Fulton Business Radio.